myself situated. Hi, everybody. We're gonna get started here in just a minute. I am going to get myself all situated, and I'm gonna try to figure out my recording to where it records both of us and not just me when I'm talking and Josh when he's talking, but I'm not sure if I'm gonna be able to
give me permission to record. I think it might be, I have to click the record button too. So just give me permission to do it. And I think that should be good.
I don't know where I give you permission. It recorded both of us last time. Let's see, hold on. I can remove you.
Yeah, well, I'm on another computer right now. That might make it tricky.
That's okay. We will make host. Okay, good to rename. All right. Allow panelists to start video. So it's, but I think that was to get us starting. Merge to meeting window. Oh, here it is. View, attendee view, follow host view. I'm gonna try that. Okay. Sorry, guys. Those of you that know me know I always have some kind of technical thing I'm trying to work through.
Oh, don't jinx yourself for every future call.
All right, I'm getting my question and answer panel up, and we did not do any polls this time. We don't have a huge slide deck to share with everybody. We've got a minimal one for introductions and just kind of an overview of what we're doing. And so I am going to, it's in Google Slides. I'm not used to presenting from Google Slides, so.
No worries, we'll figure it out.
Bear with me. Okay, I'm gonna share a screen. We'll get everything. Who can share screen? Opens. Okay. Well, let's actually share screen. Hold on just a second. Okay. Okay, does everybody see our cover page of the presentation? Can somebody post in a chat what you're seeing? I always like to check and make sure.
I can see it on my side, so I think.
Okay, cool. Here, like I was about to say, is anybody there?
Yeah, just click the X on the bottom. Actually, just hit F11 and you should be able to, it should make it full screen because we see the browser outline, all your tabs there.
There we go. All right.
Perfect.
Awesome. Okay. Well, let's get rolling. Hello, everybody. I see a couple of several names that I recognize. I appreciate you guys joining us. I've got with me Joshua Kim, and he's got a really interesting background, and I just found a huge value in what his expertise is in our industry of home care hospice. And so I thought this was a very great co-host to bring in, deliver his message and talk to you guys. So I appreciate you all being here. It will be recorded. We will tomorrow, you will get an email with the link to the recording and the slide deck that we have, which is very minimal. This is going to be much more of a free-flowing conversation, and we are open to questions, anything that you have. I don't think we definitely won't take 90 minutes, and I'll quit booking it that way. Those of you that follow me for a while, you know I always book 90 minutes because we've been doing so much COVID fun stuff that there was always a ton of questions. So I wanted to make sure that we always have plenty of time for that. But we don't get cut off if we go over the time. It just keeps recording. So, about an hour, we'll be in and out. And so get your questions lined up and we will get going. So I'll introduce myself and then I'll turn it over to Josh. So if you don't know me, my name is Amy Knight with Knight CPA Group. We are a CPA firm located here in Austin, Texas. We serve nationwide and we only serve home health, hospice, home care, hospice, and nursing facilities and assisted living. So home health, home care, hospice, nursing homes, assisted living, that is all we do. Then of course, if you're an owner and you've got like a golf course on the side, we do that as well. But our bread and butter is the home care hospice space. We do full services all the way from paying your bills, maintaining your books to cost reporting and tax work. We do not provide payroll services any longer, but we do have a really tight partnership with another payroll provider that I love. And so we have a good connection there. So that's enough about me. And I'm going to turn it over to Josh. Josh, why don't you give everybody an introduction of yourself?
Yeah, so I've got a young face, as you guys can tell. My expertise is primarily in the SBA financing world. I used SBA financing to buy 3 home health and hospice businesses before I could legally drink. After running those businesses for a while and dealing with all the nuances and machinations of Medicare and everything, I elected to sell those businesses and focus on some other businesses more in the finance space. But one of the businesses that I own is, 7 Accelerator. We're the ones kind of putting on the webcast here with Amy today. And we specialize in working with business owners who are looking to raise capital through SBA loans specifically. We do have some other credit-based funding products that we deal with, but most of the home health and hospice, assisted living, skilled nursing clients that we have are pretty easy fits for the SBA bucket. So, that's my background. I've been on both sides of the fence as a home health and hospice operator. Before we got on the webcast with Amy, we were just joking around about some of the provider relief fund, the HHS reporting requirements that they got going on, things I'm very familiar with, Medicare's changes to the RAP payment for home health providers specifically, and some of the other regulatory headwinds and, some might think tailwinds that are in the industry, but I've got a great amount of expertise in home health and hospice as well. I don't advertise myself as such. I just know a lot because I was in the space myself. I know what the headaches are that you deal with on a daily basis running a home health business. And, more specifically, the difficulties that come with raising capital. I see Chris is talking here. Owning a home health agency makes me drink. Yes, I lived in Vegas, and I'm not going to say I became an alcoholic, but some of the headaches running an agency do make you want to, turn to drinking. But I've got a very interesting story with that because I use them to buy, these businesses, but more specifically, I have expertise around how difficult it can seem sometimes to navigate raising capital for a home health and hospice business. You go to Bank of America, you go to Chase, you ask to sit down and talk with one of their SBA bankers, and their first question is, what kind of collateral does your business have? Well, sorry, this is a business where it's a service business. We don't have that kind of collateral. Assisted living, skilled nursing is obviously a little bit different. But at the end of the day, most banks are not really well equipped to help business owners who are in an industry that doesn't have a ton of collateral, especially the bigger banks. And so my real core expertise, my real value add is I've got a great Rolodex of lenders that we pair up. That's kind of what we do with 7 Accelerator. We're kind of a financial consulting and education company. We help work with business owners, not only educate them about what the best options might be available to them for SBA, but also pair them up with the best banks for their specific business, and depending on the dollar amount, the industry, the geography, a bunch of other varying factors that can change which bank is actually going to be the best for your business. Just like Amy is a specialist CPA firm who works with home health and hospice, there's a million CPA firms out there, but it doesn't mean that those other CPA firms are going to be any good for your business because they might not understand your business. It's the same thing with banks. And so that's kind of what we do. We educate, we consult with, we help people best position their businesses for financing, and then, do the hard work of pairing them up and help guide them through the process. So that's a little bit about my background. And I hope you guys find that interesting and the overlap a little bit of relevant. So I guess we've turned now to the SBA slide. So if you're not familiar with SBA, I'm sure everyone is to some degree about the Small Business Administration. Some folks may not have heard about the SBA until PPP and EIDL was getting rolled out everywhere, but the SBA has actually been around for quite a while. The rollout of PPP and their scope of EIDL was definitely unprecedented, but the main loan products that I deal with are the 7A and 504 loans. These are the flagship loan products that have kind of been around forever and will continue to be around forever. And generally speaking, for everyone in the audience here, I think 7A is going to be definitely the more suitable product. And this is just to give you guys some background, what are some options out there for my business if I was looking to raise $100,000, $500,000, $5 million for something. 7A is definitely the more versatile loan product because you can use it for really anything. You can use it for growth financing, refinancing debt, business acquisitions, partner buyouts. You can also use it for improving or buying real estate. The dollar amount will go up to $5 million. And if you're getting real estate as part of the deal, you can get loan terms out to 25 years. The maximum interest rate right now is about 6%. Oftentimes, if you're getting real estate with it, it's going to be much lower than that. For 504, it's definitely more limited. You can use 504 for skilled nursing facility and assisted living facility purchases and improvements. But generally speaking, the 7A is the more versatile product because they can give you working capital, general growth capital that cannot be accommodated through 504. So a lot of times, guys that I see that are looking to buy an assisted living facility, they actually end up looking at a combination product where they go with a 504 to buy the building and get their real estate improvements, and then they go get $250,000 to $500,000 on the 7A side to sustain the operating side of the business, the operational working capital side of things, right? And those 504 loans are almost always 25-year term, and you're going to get better rates on that. I think I've neglected to put an interest rate on there, but the blended rates right now on a 504 are closer to 6.5%. So for all the folks that might be interested in refinancing a conventional mortgage on a property, if you own a home health or hospice and you own your building, you're interested in buying your office building, 504 is the better option. If you just want to go for like lowest rate just to buy real estate, the appeal of SBA loans above conventional financing a lot of times is going to be better rate, better term, both from an interest rate and a length term standpoint, but also they're much better from a down payment standpoint. There's a lot of instances where you can technically do 7A loans to buy a piece of real estate with $0 down. If you've got a strong business, I have lenders that will do them as rent replacement transactions. They classify them as expansion loans, not real estate acquisition loans, which traditionally will require 10% down. So it just depends on your unique situation. But if you have any need to hey, maybe I want to refinance my building into, a loan term at 3.5%. Now is definitely the time to do that. And I guess we can jump to the next slide, Amy, about some of the incentives that are out there with SBA loans right now. But everyone has heard about PPP. Everyone's heard about EIDL. Obviously, everyone on the webcast here has probably heard of the Provider Relief Fund, some of the Medicare money that they just dropped in your bank account last year. One of the big incentives with the CARES Act that was much overlooked, primarily because of the amount of chatter around all the other programs, was the 7A and 504 loan products got some enhancements. So if you guys had outstanding existing SBA loans, they actually covered 6 months of payments for you. They were initially paying 6 months of free payments on new loans, but they trimmed that back down to 6 because they were concerned about the amount of funding that was allocated. We've got a question here. Do you have to be a U.S. citizen? We'll get to that. There are ways around it. So they covered 3 months of free payments. They're also waiving the guarantee fee, which can be pretty significant. It's about 3.5% of the first million and 3.75% of every million thereafter, or every dollar thereafter, above the first $1 million in guarantee fee. And that's, the SBA is basically one big insurance company run by the government. They actually turn a profit every year, which is funny because everything else in the government doesn't. But they collect a guarantee fee from every loan they do. They collect that, they pool it, and they use it to pay out the loans that go bad. They guarantee, and then the third benefit you got is 90% guarantee for the lender. This is the third main benefit for all new loans that are originated in the next couple of months. up from 75%. So traditionally, the bank is going to get a 75% guarantee on a 7A loan. The way 504 works is a little bit different because the bank just does a 50% loan to value first position mortgage. And then there's an SBA entity that does the difference, whether it's 35 or 40%. But on the main 7A loan, the guarantee is up from 75% to 90%, which is big for lenders because I have several deals right now that we're working on for clients where the bank is like, hey, we like this deal if we can get the 90% guarantee. It's a riskier deal. Maybe the cash flow is not as strong. The guarantor is not as strong. Maybe there's other issues with it that are there. So those are the three main incentives they have. Those are only available through October, which is why that we're, trying to get this information out and disseminate it as quick as possible to as many business owners out there. The other thing I'll say, and I touched on this on my intro, but home health and hospice companies can get SBA financing. Just because you've heard no from one bank before doesn't mean that you're not eligible for SBA financing. And this is a key misunderstanding I have to clear up with business owners through all industries, right? Oh, I went to Bank of America, I went to BB&T, I went to Wells Fargo. I talked about getting an SBA loan, and they said, no, we can't get an SBA loan. This doesn't mean that you can't qualify for SBA. You just have to realize all lenders are different, right? And that's my number one rule that I emphasize with people. Not all SBA lenders are created equal. And the sooner you can recognize that and use that to your advantage in making sure you pair up with a bank that understands your business, likes your industry, and can generally accommodate your loan requests, both from a size, geography, and industry standpoint, the better off you're going to be. And that's exactly kind of what we do. Shameless self-plug. It's what I do with business owners every day. So you can borrow up to 5 million under 7A or 10 million through 504 if you've got some sort of real estate need. One thing I will say is that there's a slightly different, more expedited underwriting and approval process for SBA loans if it's below $350,000. So if you're sitting on the webinar here, you're still chewing on glass over Medicare, cutting the wrap payment down to zero and paying 100% on finals, which they did that this year, right? They didn't postpone that to next year, Amy? Okay, that's what I thought. I got out of the business earlier this year, so I'm not as fresh on that. But if you're just looking to get some working capital in the door of like $350,000 or something to help, float operating costs. Maybe your insurance companies are being difficult; they're not paying on time. I know I dealt with that on a daily basis. Having to yell at and argue with the people at United because they didn't pay our claims 6 months after sending them in. SBA financing is probably one of the cheapest ways you can get capital in the door. You can go to factoring groups, you can go to this, that, the other, but SBA at the end of the day, my favorite part about helping business owners with it is, objectively speaking, it's the best financing tool you can go for, right? 6%, 10-year term. You're really not going to get anything else better out there. So A to Z funding process for loans below 350 can actually be 30 days or less if all your books and whatnot are in order, which if you have Amy, I'm sure they are. Those can get done very quickly. More traditionally, whether it's a real estate purchase or whatnot, those are closer to 60 days, but they can definitely go a lot quicker if you have all your ducks in a row. I'm sorry, is that my Slack or is that yours?
Look, I am trying to turn my Slack off and okay. I cannot find the mute button.
I did it earlier. Just go click on your profile picture, click on pause notifications, and then you can do it for an hour. It'll shut up. So
I could not find that for a minute. I'm sorry, you guys.
I'm like looking at mine. I'm like, I turned mine off, but I guess you guys use it too. It's a great platform. So so there's one question here. I guess we'll jump into questions. You have to be a U.S. citizen, legal permanent resident to be eligible for 7A, or legal residents or temporary E2 investor visas can also qualify. You actually can. It's kind of tricky. And feel free to reach out if you need more specific on your unique circumstance. If you have if you're a legal permanent resident, you can. I believe if you have a green card, you can. I've run into a couple situations like that. The easiest way to get it done is if the business is 51% owned by someone who is a U.S. citizen. But I believe if you have a green card, that will also qualify. But the thing is, you have to be here for the life of the loan. So if your green card's good for the next 10 years or whatnot, you should qualify. Feel free to reach out for more specifics. That's not something I can answer off the top of my head because I don't run into it a lot, but I have someone on my team who I can consult and who's more of an expert kind of in that department. And I think we've got two other questions. Let me pull those up here.
And I've got a question too.
Yes. All right. We'll start with yours.
I was going to say, so you talk really, really fast. Where are you from? I didn't ask this question because you ain't from South.
I grew up in Hawaii.
Okay.
Well, I grew up in a military family. So I think the 4 years of speech and debate that they stuck me through has exacerbated my fast talking. I often get confused for, or not confused, but yeah, people point out I look like Ben Shapiro, and I tell them I don't think it's because I look like him. I think it's just because we both have a very similar way of talking. So sorry if I blaze through certain things a little bit too quickly. I just get excited.
So, well, what I was going to ask, could you go back and explain the guarantee, like it be a 90% guarantee instead of 75% guarantee?
Good question.
What benefit does that provide to the end consumer?
Yeah. So the way it works is, and you know, SBA 7A and 504 loans are different than EIDL, because EIDL, you go straight to the SBA portal, you apply, and they drop money in your bank account after they underwrite, approve, and sign loan documents, they fund it, right? 7A and 504 are different because you actually go to a bank. The bank is the one that will actually issue you the loan. And the way it works is the SBA, the SBA is the one guaranteeing the loan on the back end. They just administrate the program. So what that means is if the bank writes a loan to a business owner for $1 million, the government through the SBA is guaranteeing 90% of it. Meaning if the loan goes bad, the bank takes a loss, the SBA will cut a check to the bank for $900,000, right?
Okay.
Their downside risk has been mitigated by a factor of 75% or 90%. The benefit to the end business owner, and this is really a benefit that's not really directly visible to a business owner, but it is in the aspect that if you have a deal that's a little bit riskier, the bank might look at it and say, we don't want to do this deal with a 75% guarantee, but we will do it if we have a 90% guarantee because our downside risk is more mitigated, right?
Gotcha.
That's the benefit, in that you're going to have an easier time getting a bank to approve the deal, because when they're doing all their credit analysis of the 100 different factors they look at, and every bank is a little bit different with what they look at, that is a weighing factor. And I have had deals that we're working on right now where the bank has come and said, hey, we're doing this deal. If this was a 75% guaranteed deal, we would probably be on the fence about it. It probably would not be one we'd be as willing to get done, but because we have a 90% guarantee, we'll do it. And it just comes down to a reduction and mitigation of the bank's downside risk, right? So
Okay.
that's really all it comes down to. So the other question we have here is from Emmanuel. So I don't know, when I click answer live, does this put on the...
Oh, it just marks it as answered.
Okay.
And,
Yeah.
and if you guys would put your questions over in the Q&A panel, it allows us to answer and mark them answered. And so we know we get everything handled. Emmanuel, you owe me an email, by the way, since I have you.
Yeah. There we go. Yeah. So I've got a second screen up here with the questions. So sorry, I'm like looking off the side here, but so do you have to have a D&B score to qualify? You don't. This is a big one that I like clarifying for people, because they often like, well, I don't have great business credit. How does this work? Excuse me. Sun's in my eyes. Shouldn't be able to sneeze, but you don't have to have a Dun and Bradstreet's number to qualify for SBA. SBA lenders generally don't really care about the business credit at all, unless you have, like, if you habitually don't pay the business's bills and there's a bunch of collections and stuff in the business, they will see that in a search. But if you don't have a D&B score or a general, like, you don't have business credit, they're not really checking for that, right? More so what they're looking for is on the personal side, personal credit. What are you, what's your personal score like, give or take? That's more what they're looking at when they, look at quote credit scores, right? So possible disqualifiers, we'll answer this one as well. What are some possible disqualifiers? The main disqualifier that I see for SBA loans is that the business doesn't have the cash flow to support the dollar amount requested, right? SBA is very similar to if you went out and wanted to buy a rental property, right? If you were going to go out and buy a rental property where your monthly debt service was $5,000, the bank is probably going to want to see historical cash flow off that rental property of at least, 1.25 or 1.5, right? So what would that be? $6,250 to $7,500 a month. The same thing is how lenders look at a deal. Does your business have historical cash flow to support it? Now, this is not to say it can't support startups. SBA does do startups. There's kind of a misconception that SBA is the golden panacea for startups, and that's all they do. And if you need more than $354,000 to $500,000, you're not going to be able to help. SBA is actually far better suited for loan requests above, $500,000 than it would be for startups, but you can get startups done with that. I have other financing resources that we've brought in house that are for, dollar amounts below $100,000, 0% trade lines of credit, other types of stuff that are more suitable for businesses that run into that as their friction point. Other disqualifiers can be if you've got an adverse credit score like below 650. There's another question here about, what personal credit score is required. We can kind of lump these together, but generally speaking, a weighted average of 650 is what they're looking for. And when I say weighted average, if you have two guarantors on a loan, one's at 620 and one's at like 680 to 700, that'll be a weighted average above 650. You generally should be fine. The absolute minimum is 600. And if credit repair is something that you would need before going through SBA, that's actually one of the other services that we kind of brought in house recently, just because we weren't running into a lot of folks. I had my identity stolen. I need this before we go with SBA. So we can help position and clean anything up. And you'd be surprised using the Fair Credit Reporting Act, what kind of things you can get dropped off. Even if you didn't pay something, you can still get it removed in a lot of cases, which to me is crazy. But you just throw the book back at the reporting agencies. And for the most part, they don't really care, right? They're not the ones losing money. It's the banks. So hopefully that answers that. But generally speaking, those are the two biggest disqualifiers that I see with business owners. They don't have the cash flow to support the dollar amount they're asking for, or they don't have the personal credit to support it. But both of those things are ones we can kind of get around, either, with, like I mentioned, we have other products that we can help get them into, and then they can get the business's cash flow up to where it needs to be. And then we can refinance out that other money within a year and then put them into a better long-term SBA product. But yeah, hopefully that answers those questions. So we got that.
And part of the reason why I felt like this was so relevant is I've been in home care since you were in diapers. I'll go there. And, from the CPA standpoint, and it is traditionally difficult for a home care or hospice, a Medicare provider, to go get lending at favorable terms, because what the bank says is, do you have collateral? And you say, yeah, I've got accounts receivable. And they say, oh, that's from Medicare. Thanks, but no thanks. That's what we've always run into. And so I've really worked with a lot of people that just know you got to be able to cash flow this. And so to meet somebody that has home care experience, home care hospice, like actual in the trenches background, and then know how to work through these SBA and other lenders, specialized. I just think there's a huge value in that. And so I would be curious, I should have done a poll. I would be curious, how many of you feel like you've tried to get lending and you just can't because you're a Medicare provider? And that's why when we were talking, I said, this is a great timely topic. And that's why I felt like it would be a really good idea to bring it to our audience and, just shed a little education, a little enlightenment. And, another reason is, one place that I do see that will lend are these, what do you call cabbage? Like payday loans almost. I don't think they call it that.
They're raking you over the coals on
yes.
And let me interject one thing. A big reason that a lot of lenders won't do anything with Medicare AR is usually there's actually a stipulation in, I don't know if, I think it's on Medicare side that, and it's primarily you go to the bank that you have a checking account with. If you have a depository relationship with a bank, that bank cannot have any sort of lien against your receivables. I believe you can go to another bank and they can do it. But if you have a depository relationship, you can't have a credit relationship with that bank if the Medicare receivables are a portion of, the collateral. But, at the end of the day, like really, especially Medicare receivables, they're only as good as your operating business, because, if your business just shut down one day, those receivables just disappear, because you need to have people in the office billing claims, nurses filling out notes. You need to have all that documentation gets collected. You need to go chase those doctors down to get the orders signed. Otherwise you can't bill a claim. So a receivable is not a receivable until it's actually been billed. And, that's kind of the other issue I think that there really is with why lenders don't like touching Medicare receivables, is because they're not as easy to liquidate or do as other receivables, right? If you've got a business that's got a $250,000 receivable with General Electric or Ford Motors, they're going to pay that, you know?
Well,
Like,
that's
it's
what's
not hard to
funny.
do.
That's what's funny to me. I get the private banks not doing it, but the SBA, so one government agency won't finance based on another government agency's ability to pay their claims. I mean, it just cracks me up.
Well, it's not really I think specifically with Medicare, it's not about an ability thing, right? They know that the money's there. I mean, technically there's an infinite amount of money there, right? They just print more money anytime they need it, right?
Right.
Technically, that's not how it works. I'm just being a little facetious, but the issue is more so they're hard to collect on without the operating business, right? And that's, I think, more so what the issue is. And, at least I know a couple of the banks that I work with, that do SBA. I don't send them any home health, hospice assist, or anything that has a Medicare payer, just because they're not a fan of any sort of government reimbursed business model because of how often things can change, right? And as we can see it, year after year, we're going to cut the wraps to 80%, we're going to cut the wrap from 50% of the payment to 20%. Now it's zero. Now we have a 30-day episode. Now it's a HERG score. All those different things are kind of why banks don't like that. It's because in the banking world, the easiest business models to underwrite and finance are the ones where they're consistent, right? I manufacture glass bottles and have for 100 years. Okay, that's a great business for the bank to go underwrite a new manufacturing facility for, because that business model doesn't fundamentally change every year. With home health, hospice, anything tied to Medicare, it's really at the government's mercy, right? If they decide we don't want to pay you guys anymore, guess what? That's what it is. So that's really more so what the issue is. But, that's the beauty in the SBA model, because you have one government agency guaranteeing, the supermajority of the loan that is given out by a bank to a business owner, right? And so, and that's one of the things I'll highlight for people. It's not a question of, hey, because at the end of the day, the bank knows that the government is going to guarantee the 750 and there's a government agencies behind it, but they're worried about their 25%. That's what they're worried about. They don't care how much money the SBA makes or loses, right? They only care about their 25%. And so when they underwrite deals and they say, we don't want to touch it because of this, that, the other, a lot of it comes down to most big banks out there are not suited for smaller businesses. They really aren't. Even though they advertise, hey, we do this. I've had dentists who make over $1 million a year go to BB&T, Bank of America, Wells, Chase. Hey, I need an SBA loan to go buy another building. I want to go buy this piece of real estate, for $600,000. I need to get $350,000 of money on top of it. I need like $1 million to open up a new practice location because I can't take all the volume I have at my 4 practices. This is an actual example, right? The guy had 5 practices actually. And the bank was like, all right, cool. We'll give you a loan, but we want 40% down and we want a bunch of extra guarantees from other businesses that you own and this and that. And he's like, that's ridiculous. I should only have to put down 10%. I have great cash flow off my practices. What's the deal? And unfortunately, that's the characteristics and the dynamics of lending interactions with small business owners and big banks. So all the top banks that I work with are small banks that you've probably never heard about, that are nationwide SBA lenders that can get really aggressive, if a business falls in their bucket. I have plenty that really like the home health, hospice, assisted, and skilled nursing space, because they understand it. And that's the other issue is you lack subject matter expertise, a lot of these big banks, because the people who are interfacing with you as the business owner, they're not actually the ones having the one-on-one conversation with the person who's got the credit authority. They package up the loan, they send it to someone who sends it to someone who sends it to somebody else. And so by the time it's gone through 3 iterations of telephone, if there's any actual questions about the business, the easier thing for them to do is just say, nope, we don't want to do it. And they move on, right? Because they're big and they don't care. Yeah. And that's really the emphasis I convey for all business owners, is that you need to have a bank that you're only 1, maybe 2 steps away from the credit decision maker at the bank, because the banks that I like working with are the ones I'm dealing with the head of the SBA division, right? So he oversees 6 other SBA guys, and to get a loan done, we need his signature and his boss's signature, right? That's how it works. And so let me tell you, that compared to going to Chase or Bank of America on the same exact deal, even if it's got 100% collateral, the borrower's got plenty of cash on hand to support the request and the business's cash flow, it's infinitely easier to get a loan request done at a bank where you're only one, maybe two steps away from the decision maker on that credit approval, right?
Yeah.
So that's really what I have to hit home for people. It's not about the SBA. Banks love throwing the SBA under the bus when they can't get something done. It is always the bank. The SBA is just the insurance agency who guarantees, 3/4 of the loan. That's all it comes to.
That's a good way to look at it. I know I had a big soapbox after PPP, and you guys, I held true to what I said I was going to do. I left Chase Bank. I am not a big cat for them. I went to Vista Bank here locally in Texas, or kind of out West Texas. I know Emmanuel that asked questions. He went over to Vista Bank. If you're still working with a big banker, you really need to consider what's important. And, I will say Vista Bank is smaller. It's great, right? And I'm not promoting Vista Bank. I'm just saying any local bank, right? But it's so cool because if I can't, I apparently suck at remitting deposits on my phone. I just emailed Daniel. He's like, Amy, you didn't sign it right. Do this. I don't have somebody at Chase I could have signed. And then one time there was a big wire trying to come through and Chase was blocking it. And so I said, screw it, I'll go to Vista because I still had accounts at both. And sure enough, I was able to just get it handled right away. So the downside is, this is so funny because I've been with Chase for 20 something years. I don't have an ATM for Vista Bank. So I have to pay the little $3 ATM fee or whatever it is to go get cash. I do that very rarely, but so there's a little inconveniences, but the conveniences for me way outweigh it. This kind of comes to the home care hospice background. I did not value that banking relationship that people talk about because even though I'm a CPA, I work with you guys. I feel like I'm part of the home care community, right? And I was like, well, I just need good online banking and mobile banking, whatever, because banks aren't ever going to lend to us. It's not going to be important. And I think I just had blinders on and didn't realize that there are other alternatives out there. And so I just feel like I woke up to that, and I'm so grateful I did. And Vista Bank ended up doing a lot of our PPP loans. We actually had one agency, they're a $13 million agency at Chase. And so we said, go to Chase because they'll probably deal with you. Well, they started it and then left them high and dry.
Because 13 million a year in revenue, you're still small. You're, forgive my French, but you're still small shit at Chase. Yeah. You really are, right? Yeah. So I, the agencies that I had, we banked at a couple different banks because I bought them and I didn't want to deal with the whole change bank account, all that stuff. So we were like BMO Harris, Western Alliance, Nevada State Bank. I actually just took all of my PPP stuff to Live Oak. Live Oak is the #1 SBA lender in the country. I send a lot of the larger acquisition deals to them. They're not great for smaller loan requests, but if you're looking to buy another business or need, really more than call it $600,000-700,000, they're a great resource.
Where are they at?
They're out of North. So they're interesting. They're out of North Carolina, but they have they're an internet bank. They get all their deposits from certificates of deposits. They don't do checking accounts. They don't really do anything else. They get all of their deposits from medium to long-term CDs. And they have a team of 200-300 people that work in the SBA department. That's it. They've got a big corporate office in I think it's Wilmington, North Carolina. And that's all they do. All they do is SBA. They beat out the #2 They did $1.3 billion in 7A loans for the first half of the year, which was 2.5 times more than the second place bank did. Right. And, just to echo, kind of two things. One of the things you were saying is, you as a CPA, if you've ever had difficulty getting financing from some of these big banks, I've heard that too. I have plenty of banks that love financing any sort of financial professionals, financial planners, CPAs. There's different lenders that really specialize in that. The other thing I'll say too is I actually did the same thing. I got pissed off at, for all my business. I have multiple businesses now. All of them are kind of in financial services, fintech, 5 different operating companies. And I actually have found the most luck using one of the banks that is actually a small bank out of Florida that does a lot of our nationwide SBA lending for loans under 350. I set up a checking account with them. I also have another fintech bank that I use for like all of our wires or bill pay and stuff called Mercury. Mercury is great for, more startup tech finance related businesses. I don't think it'd be as suitable for home health and hospice, but I moved all my stuff over because I'm not even kidding. I had a checking account with, it was BB&T, right? I had a checking account there, and for no reason, with no explanation, they just said, hey, they didn't even send me a letter. I just went to the bank one day to drop off some, to get a withdraw for some cash or something. And they were like, hey, you can't withdraw. I'm like, all right, that's weird. Banker at the bank called back office and they're like, yeah, they said that they're shutting down your account for no reason, for absolutely no specific reason at all. And, I dug into it. They couldn't really give me an answer, but the answer I kind of got, whisper, nudge from the banker who was trying to help me figure it out was like, you're in financial services, right? You're not regulated. I'm like, well, I don't have to be regulated. I do consulting, right? I mean, this is not, I'm not a fiduciary. I'm not having to manage investment funds. I'm not, a title or escrow company. Like, I don't need any registrations, and didn't matter. They just closed it out, didn't tell me. And that was a massive pain in the ass because I had like 30 grand in there that I had to like find some, they had to give me a check. They had to give me a cashier's check. I had to go deposit at another bank. The new bank had to call, like, it was a nightmare. So everything I do now is with the small bank, because anytime I need something, I call them up, hey, Gidget, I need this, right? They're out of Florida. I'm not physically there. I'm in Puerto Rico, actually. So I'm not physically where the bank is, but I just email in, hey, I need this done or this done. And they're all on top of it. So, really, I think PPP and all that really showed a lot of business owners that you have to value that personal banking relationship. But part of the reason I started the 7 Accelerator business is because I had an above, I had a higher estimation of the financial expertise of the average business owner when it came to getting money. Right. But that's just because I bought my first business with a loan. So I have way more expertise in that. And so I kind of realized that, hey, there's a huge need out there in the market to do kind of consulting and education for business owners, helping them navigate that. And so that's kind of why I do what I do, is because I see that there's a lot of need for it, and there's a lot of value in helping business owners do that, because you do need an expert who understands the 590-page long SBA SOP. It's even more complicated than some of the Medicare regs that I had to deal with or read through. And, as well as have a lot of banks in the network who specialize in different kinds of businesses. So anyway, that's my soapbox, but I definitely agree with you.
Yeah, I do think it was important to at least see where you were rated by your bank when it came to PPP. So that was interesting. So I don't see any questions in the Q&A panel. Has anybody got any questions? Again, I kind of want to reiterate a couple of the key. What's the end date of this? So these are special programs as part of the CARES Act. So it's COVID related. So it's coming to an end, and it was no guarantee. I'm sorry.
Yeah,
90% guarantee, but
yeah, they're so you 90% guarantee. They're waiving the guarantee fee, and they're paying the first 3 months of loan for you. So even after these incentives go, this loan product will still be here. This is the flagship loan product. Still be around here forever. But if you get your loan approved before October 1st, which is definitely doable, but you'd have to start like kind of today. If you want to go get financing and you want to do that, you would have to start today. And just to give you guys context, if you needed to go borrow $1 million, right, to go buy out a partner or buy a building, whatever the case might be, those incentives would be worth about $62,000 for you right now on $1 million. 6.2% of your loan will get subsidized or otherwise, discounted with these CARES Act incentives. They had it with CARES Act 1, they extended them with CARES Act 2, and they come to a halt October 1st. So if you are interested in it, you have to start sooner. If there's anything in the new infrastructure benefit that will benefit home health agencies? I don't know.
I got 2 cents on that. I don't even have 2 cents. One thing I'm worried about, and I was actually thinking about you, Emmanuel, what I saw going into it was that they were going to strip out ERC credit for fourth quarter 2021. They were going to take that away to help finance part of the however many $1 trillion package. Yeah. Now that has only passed Senate, didn't pass Hasn't passed House.
I think they're gonna do a lot of changes with it because there's a lot of stuff in that bill that people can't agree on. So it's passed
Okay.
one side, but at the end of the day, House is responsible for budget, and it has to pass them for it to really go anywhere. So my whole thing is until the fat lady sings, don't worry about it because until it's through there, it's going to go through so many iterations. It's not even.
Yeah, and we don't really get a say. But I did not see anything else. But I didn't look at it all, so that doesn't mean there's nothing in there. But there's no chatter of anything good. The only thing I've heard is going to be taking stuff away.
Yeah. So Rebecca has a question here. What have you seen as far as PAS Medicaid services being approved to purchase a building? So PAS, that's home care.
Yeah, it's non-skilled attendant services.
Yeah. So those are pretty easy. I mean, if you've got the cash flow to support, you can definitely do that. I have worked with guys that are getting financing for like adult daycare centers, which is, I think they're funded usually under the same state Medicaid umbrella, 99% of the time. The state Medicaid covering the home care stuff, the non-skilled services, that is definitely something you can get done too. So
I will send out all the contact info.
yes, and we'll have what we'll do is we'll send out an email afterwards. Amy, I'll get you the. We'll put a special Calendly link together for everyone on the webinar today. So if you're interested in actually just booking a call to do a consult with myself, or I have other staff that can help answer questions and just kind of do a pre-qualification, walk you through stuff. I've got 12 guys that take phone calls all day to help you guys understand what might be there. So we'll send out a special Calendly link you can get on the phone. I'll try to do my best to take as many of them as I can as my schedule permits.
Okay, and I'll get that. We'll get that done. Usually I do everything today. That goes out tomorrow to kind of follow up on conferences. How do we start the application for the loan and what type of loan? I came in late. That was Gabby. Gabby, I would recommend, it's recorded, and so you'll get a recording link tomorrow. But I'm just going to say it. I would recommend scheduling time with Josh to see, or Josh's team, to see what would work for you. I think that would be easiest. Plus you can listen to the replay. We have some slides. We don't have a ton of slides. So, and Josh did just put his email in the chat box.
Yeah, you can email me directly. We only really covered 2 slides today, just covering the SBA related incentives. And then I had another one that just talked about the different SBA loans in general. These are not EIDL or PPP related. These are the flagship loan products that will be around forever. So business consulting or well. Let me see. So how do you set the end for loan? What type of loan? So yeah, so Gabby, the main loan product that I see being used by home health and hospice businesses, especially for growth of working capital, is going to be the 7A product. So we can do that. Cootie had a question. Can we apply for a line of credit until we actually need the funds? So I would still encourage you to book a call. We actually have other, finance products we can refer you to if you need something sooner. If you go for 350 or less, 350,000 or less with SBA, those can still get done in like 30 days. So it doesn't really take that much time to get it done. But one of the common uses with SBA is to do a refinance of other debt. So if you want and you've got a credit line there, you're ready to pull, go pull it today. You can just still go ahead with the SBA process, and we can just refinance out that more expensive debt on a long-term basis, right? That's a very common thing we've seen.
Sorry about the Slack, y'all. I muted mine. I don't know, but Slack's been giving me issues this week, so it's probably on my end. That little knock, that's my team. That's how we communicate.
Yeah. Hey, had a question. He put it in the chat. Do they look at individual credit or business credit? So they don't really look at business credit that much. It's not really important for SBA. They're looking at cash flow of the business and primarily the personal credit. One of the other suite of services that we offer, we don't really advertise it much because we only do it in conjunction with helping someone get an SBA loan, but we do have an in-house person that we brought on recently who specializes in credit repair and credit-based funding. So we can get you up to like $150,000 of 0% business and personal credit cards to support the operations of your business. We've done that with quite a few people. And I work with a lot of other guys that specialize in that, and they refer them over to me because I help them refinance all that money out with an SBA loan once they've kind of gotten that business, kicked off and moving, right? Emmanuel has home health has changed so much and it's more difficult today. Do you do business consulting as well, or have information on someone good and not too expensive? I am not going to be your home health and hospice consultant. I have a lot of expertise in the space, but I will tell you, I don't really keep up on that as much as other people who are more consultants in the space. If you need someone, Simeon has been good for me in the past, McBee. There's a couple of other home health and hospice devoted focused consulting groups out there that will specialize in doing stuff. So it just comes down to what that will look like for you. But that would be what I would say is just, go find a consulting group who's going to be able to specialize in what you can do. I'm sure Amy's got far more specific context on that. That would be, helpful depending on what's needed. So Cody had another question. What is the interest rate for 7A and 504? So the max interest rate right now on 7A is 6%. And the 504 varies because you actually have two loans together in one. The bank will do a first position mortgage, and then the SBA CDC will do another piece. The blended interest rate, because you are only paying one loan, the blended rate on that tends to be in the 3.5% range right now, from what I've seen on a 25-year, that's literally the cheapest money you're really ever going to get. It's even cheaper than EIDL money at 3.75%. So,
Anybody else? It's getting close to lunchtime. I have a feeling that's what some of my slacks were. I think lunch arrived. Some of my knock-knocks. Again, I will send out the brief slides that we did. And just, if you know me, you know how I roll. I don't spend weeks getting ready for a presentation, but I do get ready a little bit quicker than old Josh here. I was like, he was stressing me out this morning, sending me his slides. But this came up a week ago, and I was just trying to get it on the calendar as quick as we could, knowing the program was coming to a close. And so I don't know. I think you guys appreciate my not always being prepared and my technical issues and my, I'm real.
It's real.
Yeah. He even asked, do I need to change shirts? I was like, no, you're good. You're good. I put makeup on though. Although the first guy, just a little side story, when they were logging in, it was one of his assistants. He had on a tank top, like a black tank top with some cool headphones like around his neck. And he was like the stagehand and a ball cap. And I'm like, you're gonna have to dress it up a little more than that. And then Josh came out. I was like, okay.
Yeah. So Emmanuel, I have one more question. To apply for loan, do we directly contact you? Yeah. My email, I put it in the chat. Amy will send something out post call here. We'll do a drip sequence. So we'll pester you guys with probably 2 or 3 emails with just, hey, in case you missed it. So all my stuff will be there. If you want to book a call, you can go from there. So Pay had a question. Which of the options has a faster approval? If you're talking between, so like, I hate to be that guy, but it depends, right? If you've got a perfectly clean credit file, we can get you funded in about 2 to 3 weeks on some of the credit-based products. SBA is always going to take about 30 days at least to get it done, but that's really fast for the terms that you're getting. It's kind of one of those things. You got a leg of the stool and you got to pick. Do you want cheap? You want fast? And you want, do you want cheap? Do you want fast? Do you want good? Right? You kind of got to pick 2 of those. And so what I would say is like SBA is definitely the cheapest and it's the best overall. But it's not the quickest. It's not going to be there tomorrow. But again, that's why you prepare, right? Take a little bit of time, because all things in life that are good come with time. It's not going to be just press a button and it drops in. If it was that easy, it would be problematic. I mean, even EIDL and PPP took a little bit of paperwork, and that was literally the best and freest money you'll ever have, right? So 30 to 60 days is a good timeline. If you need something sooner than that, just to, you're in a cash crunch or whatnot, we do have other credit-based funding products that can get done quicker. Just, let us know how that would come and we'll figure that out for you. So.
All right. Well, I appreciate Josh joining us. I appreciate everybody registering and coming in and watching. Feel free to, it's free. It will be on our YouTube channel before the end of the afternoon, but we will send out a follow-up email with all the details. And in that, feel free to share that. Feel free to send it over to friends, whatever you want to do. When you go to YouTube to watch the replay, I highly recommend subscribing to our channel. We now have 200 subscribers. I'm beside myself. I didn't even know that. In our little YouTube channel, it's where we post all our latest updates. If the government changes anything with CARES Act and all those things. That's where I'm posting those updates. If you're subscribed, you should get a notification if you have it on your phone and turn them on. So Josh posted his email again. You know what, Josh?
I actually got one email. I actually got one email already from somebody. So there you go.
Okay. Did you post it to everyone or just to host and panelist? Do it again and make sure it says to everyone. Because I was trying to banter with Chris saying that he drinks because of home care, and I was not posting it to everyone. Sorry, Chris. But I thought that was pretty funny, and I totally get it. Totally get it. You see how to change that?
There you go. Yeah, that's my email there.
There we go. There we go. But again, I'll have all of those details. And Josh will also have everybody's email that registered. So I'll send that over to him and he can, pester you. No, I don't think he'll do that. But anyways.
We have like a 2 or 3 max email drip sequence. I mean, if you want to subscribe and get one email a month from us, I mean, I'm not in the business of pushing boulders up hills. I don't have to fish. If you're interested in getting financing help, we're here to help. If not, I'm not going to bug you with emails. So
yeah. All right. And you said there's a tropical storm rolling into Puerto Rico?
It was yesterday. I'm looking outside. It's not as bad. It was like 30 mile an hour, 40 mile an hour winds. I got to fly in with it. I had a bunch of flight delays. It was a whole fiasco getting in, but yeah, it's not too bad. They've got some great tax incentives here. So if anyone wants to cash out, sell their home health business, and then live somewhere that's going to be more tax friendly for them on their investments, you can also reach out to me on that. I'm not an expert on Act 60 and whatnot, but I can tell you the specifics if you're in that position where you want to sell your business. I'm going to plug this in there. I have other guys that I know that are actively looking to buy
I do too.
businesses. So if you've got anyone, if you're on here and you're just fed up with the business, you just want to check and you want to leave, you can also reach out to me. I can basically broker out your deal to somebody else. And unlike these brokers, the Stone Ridges of the world, I actually have, and I know all the brokerage firms out there, I actively have people that I know own multiple agencies and will buy. So it's none of this, hey, we're going to take a fee and just put it up and all this or that. So I'm going to plug that in there as a one additional overlap. If you're interested in selling your business, you reach out to me and I can, set you up with a couple of conversations with people, depending on where you are in the country, right? They're not going to go buy you in New Jersey if they're out in Utah, but you get the point of that.
So is Puerto Rico home base for you?
Yeah, it is. I domiciled here recently, and you'll get a kick out of it for all the accounting and tax stuff you do. But the Act 60 benefits are you pay no capital gains, and your corporate income tax goes to 2 or 4%, depending if you're above or below $3 million a year of net income. And all the money you pull out of the business is taxed as a dividend at 0%. Dividends are tax free out of your own businesses. So it doesn't work for all business models. I mean, you can't really set up a home health business and do export services, but for finance,
I can set up an accounting firm though.
You could move here and set up an accounting firm here. Yes, exactly. And you qualify for export services and this and that. So if you're interested in learning about how to do that, you can let me know and I can tell you how to do that. I've got plenty of other people. I've been telling them other finance consulting related businesses. Some are tax related, some are not. And I've just been telling them how to move it here and set it up. And I'm like, hey, I should set up my own business here to help do that because I've helped so many people, at least have the preliminary conversation about what that entails.
Yeah. So. Interesting. All right. Wealth of knowledge. Okay, guys, I appreciate you guys. Let us know if you got any questions. I will send out emails tomorrow and we can just follow up from them. All right. Appreciate everybody joining. Right. Thanks, Josh.
All right. Bye.
Bye.